Real Estate 101 with Boyle Team Real Estate.
Hello everyone and welcome to our next podcast buyer series. It's Marlene Boyle from Boyle Team Real Estate, and I am here again with the wonderful Lora Behm from Behm Mortgages, and she's from Mortgage Architects. Welcome again, Lora, to our podcast.
Thanks for having me, Marlene.
Today we are going to talk about, since our team does sell a lot of country properties and mortgages, mortgage approval, it is harder to get mortgage approval for country properties, especially farms. So I have a list of questions for you that I'm going to ask and hopefully educate the audience. So basically, for the farms, I do know when you're buying a rural property, there's a number of acres that the lenders tend to have a maximum amount of. Can you just elaborate on that? Like how many acres do they prefer?
Yeah, so one thing, and it's one reason why I say it's very important to let whoever you're working with on your financing know that you're looking at a rural property, because everybody's maximums are different. So let's say you're pre-approved at Scotiabank for $500,000 and they only lend up to 20 acres, then you might have a problem with your pre-approval if in fact you're looking at more.
Right.
The maximum we tend to see is 100, but I would tell you it's more around the 25 to 50 mark that is the common amount of maximum acres that you can lend on.
And then it starts getting more complicated, and you start narrowing down the lenders.
Yes.
Who is going to lend. And yes, I agree with I always tell my clients, if we're looking at country property, even well septic alone, let alone acreage, I always say your lender has to know. So it's a good point for everybody out there to know, to let your lender know. Because you're right, you're approved for 500,000. Oh, now you're looking at country property. Well, now you're not approved for that.
Yeah.
Or we have to go to a different lender, which might be even more interest, right?
Right.
Higher rate.
100%. And a very, very common misconception is that if you're approved for 500,000, everyone will lend you 500,000, and that's not the case. Every single lender looks at every applicant differently.
Right.
Even if you're make the same amount of money, it's very different across the lenders. So you have to make sure that whoever you're pre-approved with knows that what you're actually looking at.
Right. Now, back to the farms, I know when they're evaluating the farm for, let's say, an appraisal, they do usually the house and an acre, or the house and 5 acres. Is there a standard? I see it all over the place, so obviously there's not, but something more common?
Yeah, absolutely. So first things first, you will always need an appraisal on a rural property, even if you have a ton of down payment. So you will always need an appraisal, which again, sometimes with residential properties, we're able to get an automatic appraisal.
Right.
Always need a full appraisal with a rural property. And then when they do that appraisal, every lender does have a different standard, but even if you have 50 acres, they will only allow us to use the house plus a maximum amount of acres. It usually ranges between 5 and 15.
Right.
5, 10, 15, they don't kind of go in the middle there. So what that means is if for some reason your realtor is putting a lot of value on the acres for whatever reason, if that's where the value in the house is and there's a chance that you may come in undervalue, that's a conversation you need to have to make sure the financing will still stand. But it's in between 5, 10, and 15 acres.
Okay. All right. No, that sounds good. And that's typical what I see as well. And the outbuildings, again, just elaborate. I know they can't claim the value of outbuildings, even if it's a really nice barn or what about a workshop, that type of thing.
Yeah. So because outbuildings are very common on rural properties, this is where we see this issue come up. All lenders will only take the value of the one house plus whatever acres, what we just talked about. So 5, 10, 15, and they exclude the value in any outbuildings. And again, because it's common on rural properties, you can have a second home, you can have a greenhouse, you can have this amazing barn that maybe someone spent $200,000 building. They cannot take the value of those extra buildings. So again, if your offer price is dependent on including the value of those things, which it would be, you have to make sure that when that appraisal comes in undervalue, because it will your financing still hold?
Right. Okay. No, that's a good point. So what about, Lora, active farms? I know that the lenders sometimes can't take income from the farms, but what about if the farm is actually being active, somebody is working it? Do the lenders consider that, or?
Yeah, so there's 3 ways I would look at that. So the first thing is if it is an actual active farm where someone's like breeding cattle or beef or whatever the case is, that's automatically a commercial property.
Right.
So it no longer fits the guidelines from a residential point of view. And it's a hard line just because like literally that's how the person's making their money off the property. Then we can get into kind of what you might call a hobby farm, or maybe the person's leasing land out to someone. So in the case of a hobby farm, if it is just in fact a hobby and you're not making any money from it, that is okay, but not with all lenders. So again, that goes back to the point of you're just narrowing down which lenders will lend to you. Another thing that comes up very often on rural properties, especially for people that aren't farmers, is they might actually lease out some of the land to a farmer and get like a small amount of money. I mean, it's usually between
very minute.
Yeah, very minute. So two things. Again, some lenders won't lend at all if you're leasing out some land to a farmer, but most are okay if you are not actually using that income on the application. So if you're going to get $5,000 a year from leasing out 20 acres on your property, as long as you can qualify without that, that traditionally is okay. And we can exclude
would they
that.
not, like, what's the reasoning behind having leased land?
A couple things.
For resale?
So it's for resale for sure, but it's also for financing. If we're trying to say you need that $5,000 to be able to pay your mortgage, because that's what we're saying when we say it needs to be on the application. If all of a sudden that that farmer doesn't need to lease that off you anymore, you've just lost $5,000 of income that we all said you needed. So that's the thought behind it.
Sounds good. And then what about the zoning? I know you had mentioned before, depending on what the property zone does. So what are the limitations on like agricultural versus, you know, the other ones out there?
So this zoning conversation drives me crazy. I'm not sure if it does to you too. There isn't actually a standard for zoning in Ontario. Yes, definitely learned that the hard way. So every municipality has different zoning types, and then on top of it, what's in Geo Warehouse. So it's just super confusing. And I've had properties before that are definitely agricultural, but when you look in a different system, it's shown as rural residential. So rural residential is usually fine. So as long as it can meet the other criteria that we've been talking about, that is usually fine. Again, if it shows up as agricultural zoning and we can't actually show that anywhere else, it is rural residential, again, just limits how many lenders that will lend to you, but a lot of the big ones will. So TD, Scotia, MCAP, they'll lend on agricultural. It just, again, narrows the
it's more
focus
difficult.
for you.
And then the same, then you're going to add the environmental on top.
Oh, yes.
So your agricultural, acreages or coca, whatever, but you're environmentally protected. That now adds another element, right?
Yeah, and that's super confusing to explain to lenders. Like I myself have a property that's part of Cloca, and I think we even might be part of Oak Ridges. And anytime I try to talk about financing on our property or other people's, it's very confusing to explain to a lender because they're not here and they don't understand what that actually means to be part of that.
Yeah. So Laura, I know we talked about this briefly last time we met, but I know when there's animals, an active farm, a lot of the listing will have, you know, horses. The lenders don't like that. They prefer to have that not on there. So why is that?
Why don't they like animals?
Yeah, well, why do they? Yes, exactly.
Yeah. So the biggest thing is lenders are always, on every type of property they're lending on, they're always trying to assess their risk of you not paying your mortgage. And in the case that it actually gets to the point where you aren't paying your mortgage and they need to actually do a power of sale or foreclose on your house, they're always saying, how easy is it going to be for me to resell the property? And as much as some clients think that being rural adds value to the property, it's just a fact that less people want a rural property. If you looked at like 100 people, yes, there is a lot of value in rural, but less people would be wanting to buy a rural property. So that's the first thing. The second thing is they're always saying too, it's okay if I displace Marlene if she doesn't pay her mortgage on time, but if all of a sudden you're now trying to get rid of horses and chickens and cows and things like that, that's not something that a lender is equipped to do. And there's also I don't want to say emotional part of it, but the literal, like, where are these animals supposed to go? And again, not as easy to actually displace animals.
Right. Is there an alternative option for them? Like maybe put more down? To qualify for some of these more difficult properties?
Yeah, so you are right, there are some lenders that will just do the minimum down payment, whatever that is for that property, or like they're okay with 20% down. But there are lenders for sure that, back to all those different things we've been talking about, acres,
Yeah.
like value, et cetera, there are some that might require up to 35% down to be able to close. But again, that goes back to where you qualified, what's on the property, things
And
like
if
that.
you're A lender, so I know A
Yeah.
lender, B lender is different as well. I
Yes.
always ask my clients, are you qualified through A lender or B lender?
Yeah.
Makes a difference when buying country property. Now we're coming back into the even less, not even necessarily acreage. It might only be an acre, but it's well and septic.
Yes, yep.
So maybe elaborate a little bit on that. Well, septic, holding tanks, that type of thing.
Yep.
The lenders, again, are a little cautious, probably because of the resale value if they had to foreclose.
Exactly,
right?
exactly. So I think the easiest way to say it, if you're already talking to a lender that will do rural, they should do well and septic, just
Yeah.
because you can't really have one
Right.
without the other. Holding tanks is one that not everyone will do. So again, that's
Right.
another example. You might think you're approved for a rural property, and then all of a sudden you have a holding tank, and that company doesn't do a holding tank. So that's just the thing to keep in mind, is like, will that lender actually do, again, it's more the odd things like a cistern or a holding tank. And a lot of people don't realize that when you have a well, or a cistern, there's actually extra conditions that have to be made at the lawyer's office in order to close that property. So on anything that's not on municipal water, the realtor actually needs to provide a potability certificate.
Yeah.
And I've even seen files that when the people get water brought in to put into a cistern, we actually need to prove as well that they have been filling it with a potable water source, like whether, as opposed to like some people might be collecting rainwater and putting it in the cistern. You need a condition to prove that it has actually been filled with potable water.
Right, which makes sense. Yeah,
Yeah.
the potable water is huge. If you want a mortgage, you have to have proof that your water is potable.
Yeah.
Zero,
And
zero
as a
rating.
buyer, you definitely want
Zero,
that.
zero. Yeah, you do. You
Yeah.
want that for sure. So again, back to A lender, B lender. I know there's a kind of a standard. I know it always varies, but is there a standard on down payment? People call me all the time. I want to buy a rural property. I have 5% down. Usually it's not going to work if you're a B lender. You need usually 25, 30. Can you elaborate on that part of it? Like,
Yep. So this is a common misunderstood rule. Once you go alternative, you have to have 20% down.
Okay.
You literally cannot get the minimum down payment with an alternative lender. It's literally a guideline from OSFI. And then to your point, on top of that, if it is a rural property, again, lenders are always assessing their risk. They usually want more down, and sometimes they actually need you to be very close to a highly populated area.
Okay.
Not in a big town, but it's usually like within 25 kilometers of a town that has 50,000. Again, depends on the lender. But yeah, those are two really, really, really important facts. But you cannot buy with minimum down with an alternative lender, rural or not.
And then if you're adding in an A lender, you said you have seen A lenders asking for more down because it is rural.
Correct.
Again, depending on obviously the client's credit and everything, income.
Yep.
What would you say is the max you've seen they've requested down?
Usually 35. So once you
Wow,
have
for an
30,
A lender.
yeah. So
Okay.
once, again, depends on, like, there is a really good A lender that we use for rural properties, and they tend to want 35% down. Again, it just minimizes their risk because they're okay with animal zoned
Yes.
agriculture, all those things. So it's kind of like you're giving a little bit more in down payment to be able to allow them to accept the risk
Right.
on all the things that you've asked them to accept the risk on.
Right. No, this is a little off from rural property, but kind of not. Log homes. Any restrictions you see on those? Sometimes, just same as insurance, it's harder to get insurance. Any lending on log homes?
Absolutely. So I've definitely run into this issue myself with clients. And again, this goes back to why you need to make sure that whoever you're working with for financing sees an MLS listing of the property that you are putting an offer on. So I had a client pre-approved. It happened to be for rural property, but that part didn't actually matter. And I had them pre-approved with one lender because they were trying to port their existing mortgage.
Okay, yes.
And they bought a log home. And that lender didn't do log homes. So yeah, I was able to get an exception. But again, if you're buying unconditional and don't have a way to get out of that offer, and then you've put an offer in on something that lender doesn't lend on, and there's weird abstract things that not everyone knows about. That's why it's important to be working with someone that can do those things for you. But I can't stress enough making sure that whoever you're working with for
Yeah.
financing sees the MLS listing before you're putting an offer in.
Yeah, very, very good advice. Thank you again, Laura, for coming here to the podcast today and sharing the information with us and educating our clients and the audience. And we look forward to meeting again.
Awesome. Thanks for having me.
Thank you. Everybody have a great day.